Okay, so what kind of situation do we currently have on NZD CHF? Now, from a weekly perspective, we know that we have a market that has created a nice impulse to the upside and has gone to retest a very important structure level, which is this supply zone here. In fact, after the move to the downside, the market had found strong support at this area, printing these two green candles that show us that the market is interested in these prices, and that definitely if the market will make it back inside of this zone, it will find a strong supply area, so strong resistance, and we definitely expect the market to show a reaction to the zone and melt away from it. And that is exactly what the market is currently doing. What we can also notice is that in approaching this strong level, the market has created this W formation, more confirmations that we definitely want to see the market make a move to the downside. What we can also see if we take the trend line from here, we can see that the market went very, very close in testing this trend line, and nothing will stop the market if it actually wants to go for a test to the upside. I will speak about this right now if we go down on the daily time frame. In fact, on the daily, what we can see, the market has created one strong falling knife to the downside. Basically, it engulfed the previous candle, so a nice engulfing pattern, but many people will start shorting immediately just after they see one candle, which sometimes it works, but if hedge funds have not already entered the market aggressively, so meaning they haven't already entered all their short orders, what will happen is that they will go to hunt the liquidity of all the stops that are above this high, because everybody that is shorting during this move to the downside has their stop losses above this area. And if the market will continue to the upside and go and hunt these stop losses, hedge funds will use the stop losses of all these people to actually trigger all their short positions, and then the real move to the downside will start. And that is where the best probabilities and best risk to reward will come. And that would also lead to the market actually making the test of the trend line. Now, the way in which we will be approaching this with students, I will be speaking about it right now. But first, let's go and see what we have from a COT perspective. So, commitment of traders. What big banks and institutions are currently doing from an NZD perspective, and what they're doing from a CHF perspective. Now, if we go and see what we have from a CHF perspective, we can see that with the last report, hedge funds have opened another 118 longs and closed 132 shorts, bringing the net positions at 8.9k from the minus 3k net positions that we had here. So we went from having more shorts than longs to having way more longs than shorts from an institutional perspective on the CHF, and we definitely expect the move to the downside on the other side. If we go and see what we have from an NZD perspective, we can see that currently we're sitting at minus 12k net positions, so definitely a lot of longs have been added during the move to the upside, but at the same time shorts haven't been added yet, which means that we definitely might get the last move to the upside for the manipulation before the start of the real move to the downside. Now, if we go and see what is the situation from a 4-hour perspective, we can see that on the 4 hours, the market is currently hitting support here, so we might see the start of the move to the upside from here. But anyway, the only way to approach the market in general is always being reactive and not predictive. One thing is for sure, we are still not in the trade with students. We are not in the short because we are far from having our rules satisfied. But the market might start a nice retracement back up from here, and at that point, we will definitely be monitoring price action from a 4-hour perspective, waiting for the market to shift from a bullish market to a bearish market from a 4-hour perspective, because still the market on the 4-hour time frame is in a bullish environment. So we're still waiting for the market to show more deceleration, more manipulations, and then we will be monitoring price action on the 4 hours, waiting for the market to provide to us one of our valid entries. And if the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside, and to see the market reach this downside target, which is the neckline of the W formation and the previous resistance, now turned support. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.